Morning, everybody. It is 8:10 a.m. It is March 19th. Welcome to my channel. Yesterday, the market gave back gains. So basically, we're flat, not flat, but pretty much those gains. We pretty much are now waiting for FOMC. We took a nasty drop off the open, and now we're in ultimate balance in the ES and the NASDAQ or the SPY and the Qs. Ultimate balance. So a lot of times we land there up to big events, right? Now, I don't think anybody's going to be surprised. Today's expected to be a pause, okay? But I guess the FOMC press conference following the FOMC statement around 2:30, maybe there's something said there that could spark markets to go higher or lower. That's really what's going on in the markets right now. It's really been a bloodbath out there. Gave back those gains, but that I believe is just basically you don't want to be too long hold on to FOMC. So, and yesterday, if you saw that market after that initial drop, it was a barcode. It was horrendous. So, I didn't even, I was like, this is a barcode. So, no trade for me yesterday. Anyway, without further ado, welcome to my channel. My name is Steven Gonzalez. I use market profile and buying profile to find structure in the market, along with supply and demand, gamma exposure levels, the most traded price of the year, the month, the week, and the previous day. That is my edge in the markets. Okay, that's the way I look at data. Hopefully, I can share that and impart some wisdom on you of why I use them. All these levels get reactions that I have in my charts. Okay, of course, I use market internals, which is back without super high volatility, which is back, enabling me to really read that market. Okay, so hopefully I do this every morning. You guys can join me. All right, subscribe, set that alert. All right, set that alert. And I think we can get right into it. All right, let's look at futures. All right, so Ethereum getting us a lot of love today, up 6.35%. Bitcoin, oh, give me a sec here. Followed by Bitcoin up 2%. Nasdaq's up 0.36. 10-year yields up 0.28. Dollars up 0.26. Gold up 0.24. ES up 0.23. Russell's up 0.15. The Dow is pretty much flat. Crude's flat. 30-year bonds being sold slightly. The VIX is down 0.37. We were at a 28, 29 VIX. We're down to a 21 VIX now. And silver is down 0.48. Moving on to the Mag 7 Plus. Tesla's got some good news. I don't know why it's California did something for Tesla. I think robo taxis. Let me just make sure here. I'm pretty sure. And that's not it. But I believe California. We'll get into it. We'll get into it. Tesla's up 3.12%. It's been getting destroyed lately. All right. Coinbase proxy Bitcoin's up 1.63. Nvidia's up 1.16. Remember, Nvidia's having those conferences, talking about robotics, talking about a lot of things. Amazon up 0.53. Everything's up from yesterday. There's not a laggard here. All right. Again, this is not going to be the most in-depth pre FOMC because things are going to just probably lie flat. Okay, let's look at the sectors. Okay, discretionary, that's your Tesla, your Amazon, they're up 0.45. Technology up 0.41. Then again, the only laggard is staples, which is barely down. All right, like I said, there's not much to read into some of this stuff. Today I'm going to go more into just like certain breadth indicators, seasonality, some RRG chart, and see where the rotations have been going. It's just nice to see those things. Okay, put the market in perspective. All right, so let's go on to economic calendar, and of course the big one today is our FOMC. Okay, So we have 30-year mortgages already came out, 6.67, actually rose to 6.72. It's probably because of the 10-year yield. And we have crude inventories at 10:30 and 2 p.m. Fed rate interest rate decision, consensus 4.5, previous 4.5. It's all expecting a pause. Then you got the press conference at 2:30. Okay, that's really it there. Now, if we're going to go into some news here, let's do it. With interest rates on hold, Fed economic predictions take center stage. Purdue Pharma files new bankruptcy plan for 7.4 billion opioid settlement. Trump still intends for reciprocal tariffs to kick in on April 2nd, White House says. Okay. Trump to host top U.S. oil chief executives as trade wars loom. Okay. Tesla gets first in a series of permits. This is what I was talking about. And needs to run robotaxis in California. Tesla on Tuesday received the first in series of approvals from California acquired for the electric car maker to eventually launch a promised robotaxi service in the state. Okay. Just looking at other. And it says Amazon, the company's self-driving unit Zoox, has recalled 258 vehicles due to issues with its automated driving system. All right. So Boeing and United Airlines investigators found that two key navigation parts failed on a United Airlines flight from Lagos to Washington on January 24th, causing the plane to lurch suddenly and injure several passengers. The National Transportation Safety Board said the left and the right inertial reference units failed on the Boeing 7087 jetliner. Morgan Stanley is planning to lay off 2,000 employees. Oracle, the company, said it would provide Singapore's defense technology arm with isolated cloud computing and AI services. Looks like Adobe got a price cut. Chipotle cuts target price 65 and 68. Roku cuts target price to 115 to 100. All right. That does it there. Now, there wasn't much in the juice that I saw. Let's just take a look here. I don't really see something that's standing out to me here. Okay. Now, what we're going to look at now is just some breadth charts. Okay. Good barometers that I like to look at. Okay. Now, remember, I've been talking about this. The percentage of the S&P 500 stocks above the 20-day moving average. We got down to an extreme level here, 16%. Usually you expect a bounce in the market. We got the bounce. Okay, now we're at 36%. 36%. Like I said, every time we come down to these types of levels, you usually get a bounce. The market is oversold. All right. You don't know when. The timing is different, right? We got the bounce, but the gains were given back yesterday in the S&P and the Nasdaq. All right, but this is the S&P 500, just the reading of stocks above the 20-day moving average. That's a good breadth indicator. Now the second one, I don't know if this was updated yet. That's the thing. We're going to go into first the bullish percent index. It's kind of been staying the same, pretty much. Let's see. I want the S&P. There we go. So the S&P bullish percent index. That ain't right. Hold on. There we go. All right, so 44% of stocks are on buy signals. That's improved from 34. Okay, that's improved. It's giving me a little bit of a problem here. All right, so that's our bullish percent index. Right now we'll look at new highs, new lows. This is from the NICE, so this is like an overall. Man, this is really acting slow today. This is really going into parity almost. So this is new highs minus new lows, and it's at like a 10, which basically means stocks that are making new highs and stocks that are making new lows are canceling each other out. So that has improved from down here. Okay. Now, last one I want to look at is the AI. I don't know. See, I don't know if this has been updated today. Let's go to the bulls. This is a sentiment indicator. See, it really hasn't moved. 19% are bullish of investors, and then let's see the bears. I think it's yeah. I think they come out today or tomorrow with their survey. 59% are bearish. So still not the best readings there. Okay. What I want to leave you with, not leave you with, but certain other things that I've been creating. Okay. Let's look at seasonality of the SPY. Okay. So a quick primer here on this chart that I created. This is 5 years. Okay, all these gray bars are volume. You can see March has the largest volume of the last 5 years, right? April has a large volume as well. This is the SPY, right? So the purple line is the current year. So we're a lot weaker than we usually are in March. Now this is the last 5 years. In the last 5 years, this is the average. All right, but this, just to explain this, this orange line is like cuts this 5 years in half just to compare it against recent price action. So recently, it's kind of going, it's still weaker. Okay, so seasonality wise, we are following the most recent price action, and it seems like we bottom in April and we start to move back up in May, right? Now, sell in May, go away. That hasn't worked in the last couple of years, but overall, the last 5 years usually has. Then you get a lift in July. Then you go into the September, you hit a low, okay, and then you get a rise with the Santa Claus. So that's your seasonality. Now, RRG charts, okay, right here. This just shows the rotation since the drop on February 21st. Okay, it shows, I have tickers up here, who's been the strongest to weakest. XLE has been up 0.5%, while the SPY has been down 6.5%. So the SPY has been down 6.5% since that drop. Okay. Strongest is energy. You can see it farthest to the right would be energy, followed by healthcare, right? And you can see the weakest is consumer discretionary. By far the weakest, weaker than the SPY, down 11.4%. That's your Tesla just getting driven home, Amazon and Home Depot. Okay. Now you can see semis made a move with Nvidia and then they retreated a little bit. Same with technology, made a little move, retreated. You can see communications, right, came down. So this is what's been going on, right? And you can still see these defensives, staples, real estate, healthcare, basic materials, utilities, and financials just started to get a little stronger again. So this is just the rotations since the drop, right? And the dot means where it is currently. So that's where we look at right now. I mean, literally, energy is only up 0.5% since the drop. It's moved, but it's only up 0.5%. All right. Now, just wanted to share those with you. Now we can get on to some daily charts. All right, let's go daily charts here. All right, so yesterday we gave up gains. Okay, we gave up gains. So you can see we took out and closed below the previous day's lows right there. Okay, now, I mean, if you really got to change, you got to take out this low, right? We're due for a bounce, which you got 2-day bounce, and now you got selling before FOMC. So where are we at now? 561.90. 561.90. It brings us right into the middle of yesterday's range almost, or the lower third. Okay. Not a ton there to look at. Let's look at futures. Futures, you can see, look, we're at the lows of the last 2 days, 24-hour sessions. Okay. Let's look at the Qs. Qs, same thing. I told you last week, we broke last week's highs. Couldn't take it out. Fell all the way back to this previous low. Okay. Last week's lows down here, and the year-to-date anchor VWAP from last year, holding this market. All right, where are we at now? 476.20. 476.20 is about right here. You're like in the mid of yesterday. So a horrible trade location for right now. Right here, you can see it in the futures. All right, let's move on to the triple-headed monster. That's your bond market. That's your dollar. Okay. So this bond market's just hanging out. Now today, you probably get a move today, maybe. Hanging out at that anchor VWAP of 2024, and you're just moving sideways. Okay, moving sideways. Moving on to the dollar. The dollar has got a little love today, but that's going to change with whatever the FOMC says. We're just hanging out here, just like that 10-year yield. We're hanging out. Okay, and finally, our fear gauge, our VIX, right? We have fell off from this high volatility all the way back down to the 20-day simple moving average. Okay, this is actually last month's highs right here. So we're underneath last month's range, in last month's range. So we have to see what this does, but it's kind of calmed down a little bit. Obviously, you can see that, right? All right, moving on to the main event. That is your market profile and volume profile of the Nasdaq and the ES. Okay, let's do that. And there's not much to talk about, but I just wanted to show you certain levels. All right. Okay, so we're gonna expand this, push it up. Okay, and just show you what this looks like. All right, and I can show you two different things. How I say ultimate balance, right? Ultimate balance, that's where we're at. Well, before we do that, let's look at yesterday. And yesterday was a barcode once the initial drop happened. Let me get my marker out. After that initial drop, okay, so we opened right there. We cut through, drove down, right? And then we pushed down lower, and we couldn't break this level 56.51, which is the overnight lows. No, that wasn't the overnight lows. That was a couple sessions ago overnight lows. That's what that was. And the value area low from this day. All right. Couldn't break that and just barcoded. Really didn't do much. Okay. Now, when I say ultimate balance, right, what I mean is the most traded price of the last rolling month and the last traded price of the last week are equal. They're equal. What's that price? 56.70. 56.70. Okay, that just means that 56.70 has been the most traded contract price by volume in the ES, and we're right there. So whenever you're right there, right, we are going to make a big move up or down. That's how it works. All right, and you can see this on many different charts. Like this is, I see it here. See, the orange is the monthly profile, the blue is the weekly. They're equal. They're equal at the highest point right here. Okay, big moves coming today. It makes sense, right? It makes sense. Another way to look at it, I have another chart here, right, where I can show you ultimate balance. And in this chart, this white profile is this month. Notice the white profile, 56.70. This blue profile actually is last week's most traded price and this week, this level right here. And that's where price is right now. So you know the market either trends or basis, right? So from this, we're either going to go up or down, okay? And if you want one more layer and look at the SPY or the Qs, right? I can show you that as well, how I have that set up as well in my thing here. I'm going to show you that right now. Okay, so we're going to go right to the SPY. And they're actually ultimate balance in SPY and QQQ. And it's just a different way to look at it. Okay, but it's buckets. This is Thinkorswim. So check this out. This turquoise profile is of the last month. And look at this thick line is the most traded price of the last month, right? This little gray profile is this week. So guess what? 560 is the most traded price of the week in the last month in SPY. Ultimate balance, right? And when you have this ultimate balance, it's just the most agreed upon price. Most shares traded, 560. Okay? Now, let's look at Qs. Same thing. So look what happened here. Largest volume traded at what? Like 470. It's called 475. And we tried to come up here. And then boom, went right back. Ultimate balance. You just make big moves from here. Okay? That's what you do. All right, that's enough of that. Let's go back to the. Oh, I didn't give you the. I'm supposed to show it to you like that. But I think everybody got the point. All right. Okay. We're going to just get back into. Oh, not that chart. Right here. There's not much to really talk about, to be honest with you. We're going to go over. I mean, I don't expect any fireworks for today. You got yesterday's highs, yesterday's lows, overnight low, overnight high inside the prior day session. You do have single prints here, right? But we're right at ultimate balance. So honestly, I'm just going to give a scenario right now. Okay, let's just get right into it because there's no point, right? And it's going to come down to this. It's not hard today. Pre FOMC. Okay, so it's all about the edges here of yesterday, and I believe this is going to be a revert to the mean day if you get one. So let's just say the market opens up and we take out the overnight lows, right? Take out these overnight lows, test these lows of yesterday, even if I believe we come down here into this demand zone. This is a revert to the mean day. I believe we revert back to this price of the most traded price, 56.70 of the month and the week. Okay? People don't want to hold that bag before FOMC. If we push and break this overnight highs, right? Try to test the supply zone right here. Come through these single prints from yesterday. I think we eventually roll over. Not roll over, like sell off, but like I think we go back to the mean. Like I said, that is extreme. Okay? What could happen if it's not extreme? Well, we do this. We go up, we go down, we go up, we go down, and then we settle around here for FOMC. Because who's going to want to hold that bag when 2 p.m. comes? You're not going to want to. You're going to revert to the mean. Okay? That's why this is not a day where it's an unbelievable edge. All right? The only edge, like I'm saying, that you have here is knowing that most likely we'll have a de-risk situation if you're selling off. People are going to take their shorts, take their profits, and you're going to come back to the middle. If people are overly long and the FOMC is coming up, they're probably going to take their profits and you're going to revert back to the mean. Okay. Moving on to the Nasdaq. Okay. Nasdaq, same thing. We're in ultimate balance. I showed you the Qs. Right. This is the Nasdaq. That major price is 197. 197. Okay. So if we look at this, I'm going to do the same thing. Let's look at this together. You got single prints from the open here. Okay. That's your highs from yesterday. There's your lows from yesterday. 197 is the most traded price of the last week in the month. Okay. Now, we're inside, right? Overnight high, overnight low. Actually, the overnight high is up here. Okay. So overnight high, overnight low, right? And we're in the middle of the muddle. We're right at the actual midpoint of yesterday's session. So it's a horrible trade location. Horrible. Okay. So again, same thing. What are we going to do today? Right? I believe we do have some type of inside out move. We might hit the week to day VWAP and fall back. We could come down here, break yesterday's lows, come down. You got a lot of demand in the Nasdaq. Okay, come down, whoop, go back to 197. Right? Extreme, go back, hit yesterday's highs, hit this supply, and start to roll back. Longs take profit. Extreme on this end, you probably couldn't test 195 and it will go. So that will be a trick, right? Because I've seen this before where like, you're not going to get a move before FOMC. Next thing you do, you get a move, and then that move just is erased. Erased when people de-risk and they go right back to the mean because you don't want to hold the bag. Okay? So that's basically it. Okay? Very simple, but you don't need to get into super details today with levels. We're not going to make most likely an outsized move before this announcement. All right. I'm going to be super picky. I probably most likely can guarantee you I probably don't take a trade unless the de-risk thing happens. That's a setup of mine that I like to do is a de-risk. De-risk setup. All right. So see if that comes. If it comes, it comes. If it doesn't, it doesn't. All right. So that's pretty much it for today. All right. Hope you guys enjoyed that. Again, no need to get into the minutia today. So smash that like button if you enjoyed that content. All right. Of course, you could join me every day in the morning. Give you the lowdown to the markets. Give you the story, what's going on, the leaders, the laggers, the news, and of course the long and short trade scenarios. Okay. And we have a game plan. All right. Game plan for me today is de-risk. That's probably the only thing. We get extended. I might think about obviously going against wherever we're going and fading back to the mean. Other than that, like I said, it's a crapshoot. I don't usually trade FOMC at 2 o'clock. I don't have much edge there. So most likely I will be looking forward to the next day. Okay. All right, everybody. Have a great day. Green. No trade's a trade. Stay green, and I'll see everybody tomorrow.